let's talk about the elephant in the room real fast. I gave you guys sellers. Let's talk about the sellers really quick. So everybody that was a seller, how could you have traded today and made money in the last half an hour?
I think for me it was once it reached and it came down, I could have write down from the top. I mean, I got into about halfway, noticed the fib level, it had a strong indication to hit it, and it did. It hit almost hit 61, at least on the 5-minute chart. I could have rolled that down as I didn't have any on top. I guess for me, when it hit the stop loss, I kind of like freeze for a little bit, kind of like took me out, and then I got to get back in there.
Let me pull up the chat. If anybody wants to talk, feel free to talk. But I'd love it if you guys could just put your stats in there, and then I'll just share that stats. Now, I kind of, from what you guys are saying, is probably going to be the buyers have won, right? Would you guys agree with that statement?
Yeah. If they got in there, yeah.
So how could the sellers have won? I think this is the perfect recap. So just kind of resetting the challenge. The challenge today was half of the group took buys, half the group took sells. And obviously what happened was, as soon as we said that, what happened is that this happened. Right. So obviously the favor of buyers, because now they were just, ride the wave. Right. What happened is that sellers were selling probably off this candle and then probably off this candle. Right.
Right.
And then what happened was the sellers took a loss because it ran up to here. And then, well, I don't want to give you guys the answers just yet as to what happened. But the challenge was, so everybody's like, well, I got stopped out. Right. And feedback was, well, I just got, lost 5% today, so I'm done. Right. And that all those comments were coming from the sellers. The buyers were really quiet. So why were the buyers quiet and not saying that? Buyers, anybody ride this wave all the way up and catch that? They were acting.
I'll say, if you have a risk management chart, it's pretty easy to calculate how many pips of heat you can stand before you get knocked out, or how deep you would be at a certain pip point.
So there's two things here. Mm-hmm. One, if you were a buyer, and I'm trying not to bring hindsight yet, Remy. They were laughing. All the buyers were laughing. That's why they weren't commenting. Mm-hmm. If you were a buyer, let's just flip that real fast. If you were a buyer and you got in, you got in here, and you started writing, maybe you got in here on this thing and you started writing this up. Well, this is what I was talking about. The first thing, I said, look at the action point. Look at this action point right here. This action point tells you what? That you should not get out, because it passed the action point, which is right here, and it closed above the action point, right? And it never bodied down. So if you were writing the action point, this first action point would have told you not to get out. And then, oh, look, now the sellers would like to be in, wouldn't they? So
yeah, I wish I stayed in.
Yeah. So this is the whole challenge. I mean, this is a great challenge, even though this is a great learning objective off this challenge. Okay. And I really think that this is really, really good learning right here, because this happens to us. This happened to it yesterday. It happened to us. It happened to us. And even though I was 3% down in my account because I was on the wrong side of this move. And I only put in a small layer, and then all of a sudden it's 3% down. But then what did I do? I waited for this move. Now, this move didn't happen as fast as I thought it would. It literally took 2 hours for this move to happen. But once that move happened, I went from 3%. I made back my 3% and almost went back 1% positive because I was just waiting for this move to happen, right? Mm-hmm. But what should have happened, and the better play, and the one thing that I was reminded about yesterday, is this, and this is what you do. My annotations are over here. So right here, let's take the buyers, for example. Let's go the buyer route. So I'm a buyer. I'm only looking for buys. Right here's your first action point, so you don't get out, right? Because it crossed this right here. This is our action point. It crossed this and didn't stall, right? So it's like this, and it didn't come back and it didn't cross over. So I would have ridden it all the way up to this action point, and guess what? It did the same thing, right? And so if it comes up here, stalls, you could have gotten out here, and then if it failed to break here, you could have bought back in, and that's what I would have done. That's
for buyers,
right? Buyers. Just talking buyers right now. So this is how I would have played if I was a buyer. So I would have bought right back in right here because it failed to break down. To get out on the stall, which was right here, buy back in a layer, and then this next candle that shoots up, it bypasses the action point. So this is your next action point right here, right? So you would have got out here, closed out of your money there, got back down. You would have thought, okay, and this is the part where I gave sellers and buyers the answer. Remember when I came in and I said, this is what you're looking for. If it pulls back past this, then it's a good indication that it's going to come back at least 50%. But if it doesn't, it's also a good indication that it's going to go up a little more. Do you guys remember me saying that?
Yeah.
When I came back in and I said, okay, look for this action right here to cross this action point. It didn't. And so because it didn't, it came down, buyers should have bought back in right here. Sellers should have got out right here. This is where you should have got out on your sells because it failed to come down. This is the big mistake that sellers made right here, is that it failed to break that, right? Now you don't know if it's going to jump all the way up, but the probability of it going higher has now been increased. And if the probability of it going higher has now been increased and you get that little bit of a pullback, this is where you should have gotten out. And because you didn't, it hit your stop losses. Now, again, I'm trying hard not to be like hindsight, right? We have no idea. I mean, it could have gone up to here and then done your retracement, but this is where price action tells you that you need to get out as a seller, and then you're out. You wait for the confirmation of this down, then you get in as a seller, right?
So you're saying here at this point, when it pulls back and it didn't come 50% of which candle, the longest one?
No, of the entire move, of the current move.
Oh, okay.
Right. But more importantly, it didn't break this. And I said it had to break this action point in order for it to have a chance to come down to here. Down. Right. So at this point, we're just dealing with this move to this move. Right. Okay. And so I said, this is about 50% of that move. And so I said, look for it to come down and test this area right here. And if it fails to break, it's going to move higher. Right.
Okay.
And so that's the thing. And if you didn't get out here, you should have gotten out as soon as it crossed over. Now I know that that's a big candle, but as soon as you saw that big candle, you should have hit that X and got out. Because you don't want to let your losers run. And this is the definition of letting your losers run when you see it. When you see somebody, okay, there you go. When you see a big candle move up, when you see a big candle move up right here, that's when you hit that X, right? And I don't think anybody did as a seller. I don't think anybody took out. Yeah, no, I get it that it took two seconds to move up, right? But if you didn't get out here, you should have been looking for an opportunity to get out. So meaning, as a trader, you should have been hovering over that close all button right here, right? And so as soon as you see it cross that, you hit that, and yeah, you get slippage and all that kind of stuff. But nobody did. Well, I don't say nobody did. Did anybody do that? I think what I heard was, oh, I hit my stop loss. Oh, it hit me, right?
Yeah, I took my stop.
And so what I'm saying is this is the definition of letting your losers run, because right here, I'm covering over my close all button or hitting that red X, and I'm hovering over it. Now, in honesty, I'm thinking it's going to come down and test this. But the moment that it stalls right here, and I don't remember how big of a stall point that is, but the moment that it stalls, that's usually a good indication to get out, because it's going to go up. Now, obviously, nobody expects this kind of a move, but you would have expected it to go up and test the top of that, right? Right here on the stall, goes up and tests the top of it. So this is a great place to get out. And I don't think anybody did, because they were kind of stuck. And this is the mindset, because you were already taking losses here. Yeah. And so everybody was hoping that it would come down and give them back their money. Right. But I said, if it doesn't cross here, it's probably going to move higher. Again, not saying that I knew that it was going to move this high, but I did know that it was going to move higher. And so the thing that you have to identify is, if it's going to move higher, why did you not get out of your cells? If you identified the fact that it's going to move higher, but you held on to your cells, you still should have gotten out of your cells, because you're in a ride the wave and you're on the opposite side of ride the wave. If you're on the opposite side of ride the wave, you need to get out and wait until the wave turns in your favor. And it generally does. It generally does. Now, you don't get 100% retracement unless you start fibbing that, right? So at some point, probably right here is when it crossed the 61.8, right? So when it crosses 61.8 off of this move, you know that there's a good chance it's going to come down and hit that 100%. So that's what I kept saying, you fib this move. And this is typical to what you see inside of a trading session. Mm-hmm. You know, not this bunch of a move, but if you get an expansion move, you generally get a 50%. And then if it comes down to here, you're going to get that 100%. Right. Mm-hmm. And so this was a great opportunity. This is a great opportunity or a great lesson to understand a little bit more in detail of price action and how to get out. So if you only take away one thing from this recap or this session, take away this, that if you know that it's going to move against you and it's a possibility of a breakout, mm-hmm. like get out, like on the outside, right? So right here, once it crossed over this, it doesn't really have any more data over here. So once it crossed over this, it could run. And that run could be 5 pips or it could be 50 pips. And the answer is you don't know what that is. You don't know, but you do have an indication it's going to move higher. So get out. And guess what? If you would have got out here and if it would have ran up right to here and then turned and came all the way back down, it's still the better play to get out and then get back in once you see confirmation. Get back in once you see confirmation. You can always get back in unless you hit the 5%, right? Once you hit that 5%, you're done. But you can always get back in. But you eliminate the possibility of getting back in if you let your losers run. Does that make sense?
Yeah.
Any questions to that?
You set a hard stop loss, or how much?
Well, their hard stop loss is usually for me is like 35, right? That's kind of generally a hard stop. That's what my hard stop is when I'm wobbling.
Okay. So you would have just hit the 35 pip stop loss on the first flurry of positions.
Let's see. If you were into sells, you're probably not selling here, but you're probably selling off this candle, this big move. Somewhere in there. So yeah, you would have hit it like right in here off this move, which again, this is where you should have got out right here on this stall, right? If you didn't, you would have hit that 35. But then I would have said the other answers. Did anybody sell off of this point right here? Because I would have. Now let's talk about sellers for a second. Okay, Lisa, great. Why? Did you plan for that to happen, or did you get lucky?
I will look across to the left and see that it can the action point.
Well, Lisa's probably lucky. I like it. So why would I have sold here? Anybody on any questions? Why would you sell right here?
Because you get to an action point there if you look to the left.
Or right here, right?
Yeah, if you
on the
look
5 minute
left,
chart. And it also just shot straight up, like a lot, right? So it shot straight up on this candle. And that was a 20 pip shot up. Stalls on that candle, I would take that sell, right? I would take that sell all the way and all the way down. Exactly. Overextended, exhaustion bar, all those things point to me like this is the last ditch effort for the buyers.
Yeah.
Right. And so on a shot up, an extension, overextended, I would have start my selling. Now, I'm going to talk to Cool for a second because I mentioned that I would be selling right here. I'd be selling right here. And I didn't see Cool take that sell. So I would imagine not a lot of people took that sell because, and this goes back to the psychology of trading, because you just got your butt kicked, right? You just sellers just got your butt kicked. And so now you're licking your wounds instead of looking for opportunities to recover, right? Yeah. Because this is a great opportunity for sellers. And if you guys, in my opinion, sellers at this point in time had the equal opportunity to be profitable as buyers did. Would you guys agree with that statement now with hindsight?
Yeah.
Obviously, the challenge ended right here. But the thing that you could have done as sellers, and Cool did mention it, and this is a technique that you should have done, but he didn't do it, but he did mention it, and he was talking about it, was if you would have played this correctly, you would have gotten out here. So you would have had to fix your trades from, this point or whatever you got in to here. The proper way to fix it would have been to get into here with pretty much a high probability stack. So I would have 2x'd my stack right here, and rode that down. And if this did cross here, I would have continued to ride it all the way down to right here, right? Because that's when it told you that you need to get out on the ride the wave. And guess what? If I would have 2x'd my high probability stack, this move right here probably would have fixed that. But if it didn't, then I would have looked to get back in because it failed to cross or as soon as it failed to cross like this right here, I would have looked to got back in on sells probably in this neighborhood somewhere over here, right? Started wicking down. And the thing that Cool mentioned that he didn't do, because I looked over to see if he was going to do it, because I'm like, oh, he mentioned it. So he thought about it, which is the first step in becoming a better trader, is to identify it, recognize it, and then the next step is to actually do it. Where Cool said the only way that I could recover here is if I could go in a little heavier, right? Now, let's define what heavy means. If you are trading light to begin with, heavy could be normal, which it should be, right? So if you're trading with 0.05s, well, 0.10 layers is now heavy. And you still keep it in the back of your mind that this is exactly the point where if you have two lots in a $10,000 account that you're saying is what I can trade with, then go heavy and use your fix-it trades. That's what they're there for. That's what the fix-it trades are there for, is when you see opportunities to fix your trades, you can use them to fix your trades. Now, you only want to use them on high probability setups. And I kept saying over and over and over and over that we should get it to come down at least 50%. So as soon as I got confirmation, this was the best confirmation that you ever got, was this reach high and an exhaustion bar. And it comes right back down. It goes 20 pips up, 20 pips down. To me, that's an exhaustion bar. And that's a trigger for the sellers coming into the market to push it back down. And now I can get that 50%. I could ride that down to 50%. To me, that's a high probability setup. Once this happened, to me, this is my confirmation that it's going to happen. And to me, this is where I fix everything and start and become profitable on this move right here. So it's fixing, and then it fix it down to here. So it's all fixed. And then I continue to ride it down to 100%. And that's where you make your money right there. And again, I'm trying not to throw hindsight into this, because it's easy to say what you could have or should have done when you're looking at it. But I'm referencing back to the point where I was calling it out before it happened. And I was saying, look for this, look for that. Right. Lisa says that you went light at the top. Now, going light at the top means that you, like we were just talking about, you just got your butt kicked. And so you're a little scared and you're a little timid and you're a little shy. Your confidence is a little shattered. And so when our confidence is shattered, we tend to pull back and dip our toe in. But guess what? What's the difference between today and tomorrow? So let's just say you got your butt kicked today, and tomorrow the same move happens, but you don't put any trades on right here. Your balance is $9,500. Your balance is $9,500 because you lost $500 yesterday, but you don't have any trades on here. You just open up the market. You're just getting in, and then you see this move. What do people do? It's a fresh day, brand new day. You see this move. They smack heavy here. They go in heavy right here because they don't have any trades on. It's a new day. I'm starting to trade. I'm going heavy. And then I win here. So what's the difference between today going heavy and tomorrow going heavy on this move? Anybody have any answer to that?
Confidence.
Confidence. Exactly. Because you're confident tomorrow because, hey, I haven't lost yet, so I'm confident. Arthemia 5%. But that's the thing, right? Whether you lose 5% today, or you start at zero, this trade, you still should have taken that trade. Price action does not change, right? And I'm going to be talking about that later today. So that's probably what's on my brain all day, is I've been looking at that. So I'm going to be talking about that later tonight, price action. But this was a total price action move right here.
If-
Whether you were a buyer or whether you were a seller, you could have made money in this market. It's just about looking for the price action and playing it correctly. Any questions on that, guys?
One quick
On that.
observation. The reason it moves so far so fast, like a 4 sigma move, it's Russia is retreating from Kherson.
Oh, gotcha. So it was a
So
news.
that's what
It was a news event of the war.
just a weird once in a lifetime news event that pushed it like 4 sigma.
Got
I
it.
didn't expect it to move like 80 pips in 10 minutes.
Yeah.
That's why I kind
So-
of different decisions at the moment.
What was, Lisa, were you saying something, Lisa?
Yeah, I was just on that wick at the top. Does that mean there's downward pressure? And if there's a wick on the bottom, there's upward pressure?
Correct. But
Okay.
what you don't want to do is put a lot of stock into one wick,
Okay.
right? One wick, unless it is like we just talked about, like it's an expansion. This has definitely been an overextended market,
Mhm.
right? It's just overextended. And then you have one last big candle followed by a huge wick. That usually means that that's kind of what I call like an exhaustion candle. Like
Okay.
it's just last ditch effort, right? But generally speaking, if you're in a consolidation and you're seeing wicks forming on the top and on the bottom, you kind of look, where are my bigger wicks? Are they all on the top? And that indicates that pressure could come down, but you try and gather a lot of information on that. But that's a different.
Yeah.
I don't want to confuse the situation. So generally speaking, you don't just look at one wick, but in this example, you look at the wick with an overextended market with an expansion higher, and then that wick is just part of the information, not the whole information. Does that make sense?
Okay. Yeah.
A good question. Good question. Anybody else have any questions on that?
For me, it's the psychology of the fact that the markets just start running and you kind of panic. You're putting cells on and it's still going.
Mm-hmm.
So if I were to just don't get panic on that and look to see where it might stop. As I look now, I look back, I could look to the left and see that is a likely position where it might stop and turn.
Correct.
Then I could now handle this the way you just expressed. So one of the things I take from this is whenever I see that run, next time I'll just look, see where it may stop, and then I can start to apply the strategy as you just
Right. And if I was trading this, I would have been in cells here. And then as soon as it crossed over, I'm like, it's an outside range. It could run. My first thought is I need to get out of my cells and flip into buys.
Yeah.
As soon as this crossed over, I'm looking for an opportunity to get out of cells and get into buys, unless right here, it breaks here. And that's what I kept saying, unless it breaks this. But the moment it stalled, I would have gotten out because my brain would have been, I need to flip into buys. Does that make sense? My thought process is these cells have gone. Whatever I have here is now gone. I need to look to get out and to flip into buys. So if I'm trading this normally, that's my brain, right? And so I don't know if that was damaging or helpful to say you guys can only take cells because maybe you didn't recognize that, or maybe you did, but he's like, oh man, I would have liked to have been in buys because everybody's like, oh, buyers are doing great, buy. But you didn't add that to your thought process of like, oh crap, I need to get out of cells right here. And this is where that, oh crap, comes into play.
Well,
right?
I think it's helpful because we could sell and make money from this. If we just understood it.
Cool. Any recap from you, buddy?
I'm here. Can you hear me?
Yep.
No. I mean, I'm seeing it, right? I'm seeing what you're saying, but it's just that it's mirroring the psychological and the technical analysis.
Yeah.
And I think that's a journey that I'm kind of seeing it, but you're right. I froze because I lost and it took the wind out of my sail. But rather than, the next trade's always the most important trade, and I didn't catch it. I mean, it's interesting because I'm writing it on Alveo and trying to do it here because Alveo, I like there's not hardly any spread.
Yeah, for sure, and
right?
zero
And
commissions.
so my Alveo, I'm way up on it, and I was able to fix it on Alveo, but for LMFX, that spread sucks. But no, I think the lesson for me was just that don't freeze when you get stopped out, because that happens pretty much almost every time. When I hit it, I freeze for a little bit and then try to figure out to do it when really it's right in front of you to fix it.
Sure. I think that is a lesson, but I think the bigger lesson is identifying the, oh crap, I need to be out of these trades zone.
Yeah.
Right. Because I don't think anybody did that. Did anybody get out of their cells here? I think I asked the question, but I don't know if I remember. Did anybody close out of their cells?
We couldn't because we were only commanded to sell.
No. Close, like X out.
I took some of my cells, but the rest of them got knocked out within the next 3 or 4 minutes.
Okay. Because I was saying that without saying it because I knew it was a challenge and I didn't want to give you guys the answers. But do you guys remember me saying that if it doesn't cross here, it's probably going to move higher? And I didn't say get out of your cells because I didn't want to give you the answers. But I did say if it doesn't cross this, it's probably going to move higher. Right. And so that's just me. That's just like, you guys need to recognize that this is my oh crap zone as soon as it breaks that, right?
So Dave, let me ask you something. So like this retracement, I mean, pretty much 100% retracement on this.
Yeah.
So what I did was because pretty much came down, I put a layer of buys on here, knowing that I don't know if it's.
Sorry, I don't know where you want to talk. You want to draw my chart and show me where you put your buys?
Oh, sorry, right here. Here, let me share my screen.
Or you can. Yeah,
can I share my screen? Or?
Yep. Go ahead.
Where are you? So what I did was on my Alveo account.
Okay.
So I'm looking at the 5 minute. It was a full retracement. I'm like, there's a high probability of bouncing it once it crossed the 50%. And so I was just waiting for it to come down here and then buy. So I got a little 5 in there, and I'm just writing it. And so at what have you found? I mean, how far does this retrace back? Does it go quarter, 50%?
Well, so here's the next thing, right? So Doug just told us that it was a reaction to news. So guess what? News pops up, price brings it right back down. So now I don't know if I would be fibbing off this because it already happened, right? And so you can't go fib off of every move, particularly because this was a news event. And this was a correction to that news event. And so now I would just be trading the action points. I wouldn't be holding on to a fib, but I would just be trading the action points here and taking your profit where it comes. But because you kind of are down here, you could definitely turn this into like a little bit of ride the wave, where if it was me, and what I would do is I would secure this trade, meaning I'd probably put my stop losses right there just in case it does decide to come back down hard and you lose everything, right? And so it's just a safety net of if it does just all of a sudden boom and go that way. Do you know what I mean? You secured your trades. Now that they're secured, you can kind of play this like a ride the wave situation, but I wouldn't think that it would cross here without getting a price cycle back down, right? And so here, if you wanted to take max profits, you could close out because it failed. But that's how I would have played that, and right, and then I'd probably be selling for a test of.
I got to bounce. I'm late for an appointment.
Oh, you're fine, but that's how I would trade that.
Nope. Thanks, Dave. Appreciate it.
All right, guys. Well, we're kind of over. Any last thoughts? Anybody?
Steve?
John, did you? Yeah, this is all recorded. I'm just going to look real quick at the. Did everybody put their stuff in? No, we only got like 3 people that did it. God.
I said I had 9,515.
No, I asked you guys to put it in
It
the.
was read only. I couldn't put it in.
Oh, I changed it. So
Okay, let me try it again.
if you guys can just quickly just grab that.
There's the second link you put. Yeah.
Yep. I'll just throw that link in there again. Kind of put your stats in there because I would like to do a just kind of show this to everybody, right? I mean, obviously how the went today, there's a strong indication that the buyers definitely won, right? So
Oops.
I guess I don't know what fib means when you were talking about that.
Fibonacci, the Fibonacci retracement tool.
I've heard of that, but I don't know what that means in relation to.
Well, just come to my meeting tonight. We'll talk about it
Okay.
quite a bit because it's one of my favorite things that I use every day in the market.
Okay.
So I don't draw it on my charts anymore because I can see it, but I still use it every day.
Okay.
But there is a chart tool that you'll need that you can start drawing it and you'll get better at it.
Okay.
It's just a way of measuring ratios with a template. And when we talk about how far it's come back, that's what we mean.
Yep.
Fibonacci numbers.
A retracement off of the last expansion.
It's not that complex.
No, it's not difficult, but it is very powerful.
Cool. Okay. Thanks.
All right, guys, go ahead and throw your numbers in. I'd appreciate it if everybody could do that. And then we will. If you guys throw it into the areas that have already calculated it, it'll give you your percentage. As you're making new things, because I know because everybody is like typing on top of each other. So it's a quick and dirty spreadsheet for sure. All right, guys, we're gonna call it there, and we will see you guys tonight. Hopefully.
What's the name?
What time?
8:00 my time. The event's in Discord. So if you want to just mark the event down and register, if not, it's going to be recorded and thrown on YouTube so you can watch the recording too. So
What is the event?
I'm going to be teaching on price action, the 3 top price action strategies that I use every day in the market.
Oh, okay. Yeah. You'll put that on. It's on YouTube, right?
Yep. So if you miss it, you can watch it on YouTube, but you can only watch it on YouTube if you like it.
Okay.
All right. Thanks, guys. I'll talk to you later.
All right.
Bye.